Hello. Good morning. Welcome to another ES Futures trading stream. Today is Monday, February. No, it's not February, it's March 4th. It is it is the rollover week. I think this is the last week of this contract, of March contract. I expect to see some kind of huge jump in volume someday close to the end of this week. And let's see what the week has for us. We have been, trading is about change, right? And we never know what's going to happen, really, in trading. That's part of the business, and I will say actually that is the business, right? The uncertainty is the business. What happened here? Today I was reading some news. I don't know if this news is old news, but Europe has Apple has imposed a 2 billion fine on Apple, and this market has been relying in tech stocks. Basically, couple stocks are few stocks are holding the market. There's a tremendous concentration of capital on these stocks, right? And what I've noticed from Apple, this area here is this. Oh, come on. This area here, right? Notice this rally this market has. Tremendous short cover rally that this one has, and from them, this market has come back inside this range here. You can see there's a range here. Maybe I would say maybe here, right? And it's just right there. Balance guidelines. You can apply balance guidelines here. Notice how many times this market has been bought here, right? 1, 2, 3, 4, 5, 6. Another 7 time it finally has a breakout here. But it closed inside. It closed back inside of this. The potential is just to the opposite side of the range. Now, since Nvidia came, it wasn't here originally, but this tremendous amount of money or capital that has come into this market, the valuation of this stock is kind of is in trillions now. I don't know. I think it's like 2-3 trillions. I don't know. I wonder if this is affecting also Apple, how important this market is, relative to the specific weight of this market here. Microsoft has been a constant here, but this market here was what I just started to catch my attention now. This one, and of course this one. I don't expect, for example, Nvidia to fall, to go back down here. But the some rebalancing also is in the odds. Notice how the Apple has been trading above the 200 moving average, and now it's below. Right? Now it's below. The 200 NVIDIA is way below here. Right? What about the other ones? High. All right. That's one thing. Before I go to market profile, I would like to check this, the other markets as well, the other indices here. I don't know anybody who trade Russell, but you can see Russell. You can see this. Can you see this trend here? Very systematic way, right? You just put this one. It's right there, but this is very dangerous here. It's very dangerous. Anybody can see this, for example, and this is, and then you just move this lower or lower, or you do the same. This is what was happening on ES. It's trading basically from the 50 here. Now, the Dow, what's happening with the Dow? The Dow there's sign of weakness everywhere. Whatever market you see, there's tremendous sign of weakness. We have just checked Apple, right? Also NVIDIA, how hyperextended that market is. Now check the Dow as well. Same thing here. Buying from this, now selling from this. This little thing here, this is whatever you see, whenever I see this kind of things, it's really very questionable. It doesn't mean that the market is going to break, okay? It doesn't mean that I am going to be short here, but this is kind of like a warning sign. Now that tells me this is information the market is giving me, right? That this is dangerous, kind of really dangerous market here. The long is very risky. Now Nasdaq has a breakout. Now we have new highs. Very confident breakout, clean breakout. Same for the ES here. You have a range, 6-day range here, 6-day range, and a strong breakout here. But notice also, what do we have here? Okay. What do we have here? This gap is just huge here, right? Huge gap here. And how many gaps this market has is just unbelievable here. 1, 2, 3, 4, 5, 6, 7, 8, 9 gaps, man. 9 gaps. This is just unbelievable here. And the risk that this market, the risk is just huge risk here. You will hear Jim say, if you have a chance to be on his intensives, or even he says this a lot also on his webinars, free webinars that he has time at time, maybe when he advertises his courses. Big capital can be invested here, and they say, right, what they say is, we are going to be here, we are invested, we are fully invested, but without shoulders in the door, right? Ready to get out, right? The first sign that there can be something here, some problem, we are just leaving, But when that happened, if nobody knows if that's going to happen first, but if that happens, that door is going to be too small for everybody to fit in, right? They are going to be, I don't want to imagine what can happen there if that happens. Also, the EAs here, we have the same thing here in the EAs. Right? Notice something here in the EAs. Where are my gaps here? Here, right? Let's put this one, the last one we had here as well. On this level to here, right? Same thing here, and something very systematic that has been happening here. First we have this one, this thing, right? We just can put a trend line here, for example, right? You got trend line buying from that level. Very systematic mechanic buying here. You just do it here. You can put it down here as well. You can put it down here. You know, whatever. But this is and what is that? Right? I was if you check Jim's market update, the weekend update, you will see he was talking about programs buying, but you can see that here as well. You don't need him to say that, right? It's quite obvious here. Where this, when let's extend this to the right, extend to the left, and extend to the right, right? Just start moving this. You got it. You got whatever you put this one. You have that's the sign of systematic buying. Program. I mean, it's not. There's also this kind of like magic thing that mysterious thing about algo buying, right? Everything is made by programs. When I send an order to the market, when you send an order to the market, when you say a buy or sell order, that's a program that is executing that. Right? That removes. But when you have big money, to remove the emotions from the trade, you just execute. You set your parameters and tell the program what to do. But the program is just doing what you, as a trader, as a manager, as a hedge fund manager, or whatever your position is in any company, to execute your strategy. Okay, let's buy when the market do this or that. You set the program and just buy. There's nothing magic about algos, this algorithmic trading, blah 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 blah, right? It is not, and that's part of the herd mentality. There's also a bias, right? When that happened, we have the tendency to think, this is a tribal thing, right? It is us against them. Right? Who's them? That's the question. Who's them? Who's them here? We are in markets. Forget about politics, right? Because that happens all the time in politics, right? But who is them? There is not them here. People like to believe, that there is somebody, that this hedge fund manager gather in meetings and they're going to do something that is going to kill the small traders. It doesn't work. Everybody has their own interests here, right? And nobody knows what's going to happen. Nobody knows what's going to happen. Something that if you were paying attention, we were talking about this quite often as well. Since the market took this all-time high, every single time the market has made a new high, the previous high has been tested, and bought from that. Every single time, The last time was last Thursday. Just last Thursday. All-time high. This high here, also this one here as well. This is just very mechanical here, and that's a sign also of a weak market too. And notice too is, but the thing here is people also complain. I mean, this is a weak market, right? This is not true. This market is going super long. We in the past 3 months, this market has rallied 1,000 points. How that can be a weak market? The structure of the market is weak. That's what James is talking about. The structure of the market is weak. It's like a house built on, on sand. But it doesn't mean it's going to break. It doesn't mean I am going to go short. It doesn't mean I'm going to be short in the market all the time. Because what we are here, we are short-term traders. We are small traders here. We don't have the power to move the market. What we do here is how can I put this? What we do is we deal basically with the rebalancing of inventory here. When inventory gets too short, the rebalancing is a rally. When the inventory gets too long, the rebalancing is a break, right? And that's why we try to get in sync with the market, to understand what the market is doing rather than what the market will do. If we want to have at least a chance, just a chance here in this business. I have no power here to move anything, right? But we deal is with what other, other companies, other participants are doing here. I'm gonna fit in what this market is doing. Right? I don't want to say in what they are doing, okay? But what the market is doing here. I'm trying to put things in context also. All the time, I am monitoring what the other indices are doing. I am checking, because and this is because the concentration of capital in these companies is huge. If you check the other, the S&P is made of 500 companies. If you remove these companies from that index, the index, everything is super red. It's the charts you will see will scare you, right? So this is becoming dangerous as well. When an index is, when a couple of companies are the ones that are moving the market. There's tremendous allocation of capital in these markets. Now, another thing that I also monitor is these markets too. It's not that relevant now. For example, this becomes very important when, for example, this is the 15, right? This is the 15-year bond here. When this market gets close to this high, for example, right? Notice how many times this, we have four highs here, right? When you get closer to these highs here or closer to these lows, that's when it becomes relevant. What about crude oil? Crude oil is far from the all-time high. What about the dollar? Right? It is far, really far from the all-time high. Kind of far also from the lows. Right in the center. It is not too much. Something that can become important here is gold. Look where gold is at. This is hedging here. Historically, gold has been seen as a hedge, right? We talk about this also, how there was a high here, all-time high that was made in the overnight. I guess it's around 21 something, but this was made here. The gold is not, I don't think the gold is coming down to here. It will stay here and check something. What else is rallying, having rallied as that? Bitcoin, right? Bitcoin is seen as a hedge, right? It's a digital gold. I want to see, I would, this is just a this is very personal opinion. I wouldn't touch Bitcoin with a 10-foot pole. Right? I think one day Bitcoin can crash into zero. One day. It will take just minutes to that. That's my opinion. Okay, it doesn't have to be yours. But it is something that I don't want to mess. I don't want to deal, no matter what other people say. That's my personal opinion and mine only. I may be wrong, I might be right. But that's a decision that everybody has to make, must make, right? Now we have an all-time high. You have a breakout in gold. Now, when gold is making new highs, it makes you wonder what's happening with these markets as well, right? If gold is seen as a hedge, why are you hedging if this market is so good? Right? It's so good. Now, check again. Now, let's go to the ES. This rally that we have here, just take a look from this low, is 41.22, right? 41.22. I guess we did this 41.22 minus 51.49 divided by 41.22. 25% rally. This is a rally from this low. That's 25%. Now the year, 47.19. Let's take note. I will take a note here. 25% rally. Okay. From the lows. This is really an unbelievable rally here. 25% is just poof, astonishing. 47.19 here. 47.19 minus 51.49 divided by 51.49. We have 8%. 8%? 8%. Yeah. This year only, the market has had an 8% rally. From here. Okay, but the rally started here last year. This is just, boy, this is really impressive. 47.59, 47.19. Alright, let's do it again. 47.19 minus 51.49. That's 47.19, right? 9%. This is just impressive, and the market hasn't had a serious correction, you know, in the last 1, 2, 3, 4, 5, 6 months, trending higher. Now, the monthly is still going higher. There's a lot of signs of weakness every week here, weakness, mechanical buying here in the weekly. The daily is is trending higher. All time frames are seen. Nasdaq, we don't have too much time here. Nasdaq is not that has not established one time frame in the weekly. The daily is starting, you know, it has a huge breakout here. Let's move this, duplicate this draw. Nasdaq is very thin market compared to the ES. Now another thing here is the volume here. Notice the volume the market has had, right? You know, compare this one. It's very unusual here. This has a really good volume here. Good volume. And that's happening when the market is having a breakout. Notice that Nasdaq has a new all-time high made in the overnight. The odds are, this high. Market might come back and check this one. There's no significant excess on the Nasdaq. The ES also, for it is comprehensible that after this big rally that we have over on Friday, you know, this could be the market getting too low. Now let's open this one. Something very that I have as my short-term reference is this level and this level here. There is the only two pullbacks that this market has. This one too. What? No, not this one. No, my bad. I mess up here. Solid. This is a mechanical. This is a mechanical. You know, this all-time high. This level is weak here, and this one. This is the most important. Alright, this is not a weak level, but it's a pullback low here. I guess I can. This is where from where everything started. Multiple things actually to monitor here. You know, I am not anxious to trade. Actually, when I made a decision today, I was feeling some anxiety over the weekend to come back to the market, and when that happened, you know, that's. I always had bad days, so I decided not to do anything today. Now, all these arrows that I have here, it has tremendous amount of volume here around these things, right? Now, what's happening to overnight inventory? We have settled here. Overnight inventory is 100% short, and notice where the high is. You know, notice where the high is. This is very weak here, right? Very big. The other side, we are going to have a counter-reaction to this overnight inventory. And what is a counter-reaction to this overnight inventory? A rally. Now, the next thing also, I didn't have a chance to finish this. Next thing is, where is the base? Where's the low this day? You know, a couple, just one couple points, less than a point, like 5 ticks from 5100. This whatever happened, he's super weak. And the impressive amount of volume that we have here, all these blocks coming on Friday, it actually makes me wonder, okay, who can be interested in buying this market and pushing this market so high, knowing that the contract is about to expire. All the buying that could have happened here has to be rolled over to the next contract. Who would like to do that? Right? Now, it's a really risky, really dangerous thing here. That's now the market is opening inside previous day range. This is an advertisement for chop. The odds of rotation are high. Nasdaq in particular, notice how many distributions Nasdaq has. 5 distributions. Okay, the top, the one at the high has been closed, so this one is not a reference anymore. Very weak market, you know, very emotional market we have here. This one, very emotional market we have over the weekend here. If you are there, let me show you. I promise I told you I was going to show you some charts here. Let me show you something here from my homework. I'm going to show you Thursday first. Okay, now we have it here. Where it is? Come on, man. All right. This is highly unusual. This is Thursday, right? You got the most important thing here, and this is the reason why I didn't share this chart, is because you were going to be watching. I thought you were going to be watching these numbers here and paying attention. What is happening here? What's going on here? I knew this. The most important thing that happened here is this spike to the downside. This spike to the downside, how fast, how quick this happened, and how quick it was rejected. Rather than these numbers that you see here, is how quick this market was bought here. It's just you know, it was like the resolution of the ending of this trade, and it was bought from there was a previous all-time high right below here. This is the most important thing here, not these things, right? This is part of the observations. The next thing, the next day, oh, and also the same day, check this out. Check the volume that market has. 40% at 40% was having started with 20% higher, kind of like a drop during the session, and notice how high it was in the run up period. This is between 4 and 4.15. Okay, 41%. That's significant volume. I don't know what's happening here. Something was happening there. Okay, another distribution has been closed in Nasdaq. Right? Another distribution, very emotional day on Friday. Very emotional day on Friday. The ES has closed this distribution here. Right? The ES. Now the other thing in ES, and this belongs to Friday, also check this out. Thousands here, thousands here, thousands here, thousands here, all over the place, a lot of thousands. Okay, so why one short this market? But this is not relevant. Believe it or not, this is not the most important thing. The most important thing that happened here is what happened right here on Friday. And we have to be able to see this, all right? Is what happened here in this area. What is now the distribution close on Friday? From Friday, we have 3 distributions on Friday. We have 1 here, 2 here, and the last one up here. But this distribution here, it is pretty much the same. The one that we have, I believe, is in 121, 122, or 222, probably 22, something like that. Same area, right? Once this distribution, that the market did not close the distribution, you have something here to the upside. And this movement to the downside is bigger time frame, or bigger time frame, stronger participants come here. This kind of pullbacks the market has really can scare the head out of traders like us. Oh no, this market is weak. Now the one time frame has ended. Early in the morning. This is going to be the beginning of a rotational day, and that's the first thing we think, right? And we can't wait to short. This market is going to take this one, because yesterday, the previous day, the market has a huge break, and we are going to have the same thing again. All right. If you didn't take this long here, probably it was going to be really hard to take this long here. More likely, this is the entry here, this one here. When the market tests this all-time high, but notice how much time has happened before the market comes back over here. 1, 2, 3, 4, 5 periods after the market open. All right, it really takes time for something to develop here. All right, now into 2 days. What's happening now? What is happening now in this market? I am not anxious to do anything here, because something else that happens, and this happens all the time also, just pay attention what time of the year we are. We have the March contract expiring in just, technically, officially it's going to expire, the 15th at 9:30 a.m. That's going to be the last day, 9:30. Friday, 15, that's the 3rd Friday of March, right? But the rollover this is the week where rollover starts. This is the week when we have some volume on March. June is we're going to start to increase, and someday between Wednesday, Thursday, Friday, we will see a big jump on June contract. When this rollover happens, right? And the next week, March is going to have really low volume. Most traders are going to be trading June already. And other things happen. These weird things happen during this period, right? Really weird things happen, and I have learned the hard way, just to keep myself out of these markets, just to keep myself out of these markets, and be patient. There might be some opportunities. We will see. For example, I'm going to do something here. What I'm going to do, I'm going to open another chart here. My chart might crash here. So I will have 4 charts open. That's too much. But I will open this chart. I will select another. We select ESM, right? Yeah, M is June, right? Yeah, M is June. Okay. ESM4. It's loading. This is what I was afraid what's going to happen. Okay, it's not. It's too much. Oh, right there. Huh. Good. It's loading. Oh, right there. Right there. This is June. Okay, this is June. Notice where the high. Let's make this red here. Notice where this high is. This is all-time high, right? 5,200. Right? This is far from the 5,000, which is the level where the market has been struggling to get to in this contract, right? Also, there was a lot of attention. The market was, buying from this level, 5,100, exactly 5,100. If we can have the same thing here, where is the 5,100? What happened here? Nothing happened here, right? So because this is new, all these references here are irrelevant now for this contract. Because let's just check this day. What day? I don't know. What day is this? I don't know. I can check that. Maybe just 4 days back. Okay, let's check this day. 228. All right. 228. What do I have there? 228. 228. Wednesday. How much volume will have June? 14,000 contracts. Do you think that there can be any relevant for in this market, in that contract, at this level, for example? Oh no, there's nothing here. They may have a weak reference here, but there's nothing that can, there's no enough inventory there for this market to go and kind of like chase or do some kind of volume a rebalancing of long inventory if it's going to happen for, in the new contract, in June contract. If this doesn't happen here in the next week, in this week, or maybe part of the next one, I have my doubts that can happen here in this one. So this is not a reference. Notice, for example, let's check here. What can I do here? There's no distribution close here. This is not late pullback low. There's no late pullback low here. What is here? Nothing here. Instead of that, I have this one, this one, and this one, right? Which is different. All-time high? I don't think so. All-time high was here. 229 high? No, this is not 229. No, 229 is way up here. Can you see? And has been repaired. Now pay attention to this thing as well. You can use your charts, because there's going to be, and that's why I say weird things can happen during this rollover period. And I'd rather keep myself. I like to. I'd rather be a spectator. You can, if you have those, man, you know how to do this, right? I'll have to say. You just let's check here. Instead of having ES, I have ES H24 is here. This is the current contract, and this is going to be the new one. Notice how scattered it is. There is nothing here, right? And daily, we will see the same thing. There's nothing here, right? Also, for you, you were asking, how the way how you do these things, the way how you do this is really quite simple. If we start, for example, how can I do this? Let's start with a new chart here. When you open any chart, when you start a new chart, probably you will start with something like this, and you will have a bunch of studies there. You will have let's add okay, well, studies, add study, momentum studies. Oh, come on, man. Come on. Okay, studies like this. I mean, you may have some lines here. The way how you do this, you just go here to settings, and go to futures. Futures here. And here, oh my bad. Here you will have to, this will be on in your chart. So you will have this thing, volume. I just remove this volume. For the daily, weekly, and monthly, what I also remove, you will find a chart like this. What I remove is the volume. I don't want to have the volume there. And also remove the extended hours, trading hours. Because the volume that we have here is not relevant to be part of, to be included. I remove that one as well. Okay, apply this, remove that thing. And appearances, then I go to appearances, I go to bar chart. Because I don't like to have these things here, green or red or stuff. That kind of like give us biases. And I use just bar charts here, just bar charts. Uptick, I can do this or this, and I hit apply. I have only that. That takes care of this. And then the moving average, I add here, this is the 50, 100, and 200. Studies, add study, moving average here, simple moving average. Look, what is simple moving average? Simple moving average. Okay? Simple moving average. Right? It will give you a line like this. You can change the color. I just choose these colors. It used to be, in some of them I have just white. And then you click in this one. Click edit study. Okay, and here you put, you can put, right now it's the 9, you can put 20, you can put 50 or whatever. More relevant for me, the only thing that is kind of very relevant for bigger capital is the 200. But I also have the 50, my bad, the 100 and the 50. Okay? Just for the sake, let's do here the 20. All right, 20. What will happen with this line? It moves a lot, right? And then I change color. Okay, change color here. I can put it white. You got white now. It's your preference. Yeah, I'm going to remove a study. Yes. The next thing, when you will have a bunch of studies similar to volume or whatever, you just go here, studies, remove all the studies. Before doing this, before adding these moving averages, I remove all the studies. Boom, and you have a clean chart there. And from here you can add, the 100, 200, maybe the 50 as well, and that's it. Another important thing that you will see that is useful, is during sometimes, futures. Remember, go to futures because this is futures. We don't do forex, we don't do equities. Go to futures. Sometimes you will adjust for contract changes. Let's see what happens here. For example, I'm going to upload my charts here. This is my daily chart. Okay. Notice if there is any change between this 50, 100, and 200 once I do adjust for contract changes. And why I do that? Let's check. 49.21, right? Apply. There's no change here. There's no change. Nothing has changed. It is the same. But sometimes, do you remember what's happening here? What price this contract is trading? 5,200. And this one, 60 points lower. Now, right now, there's a difference of 60 points here between this one and this one here, right? And when you see some difference, sometimes you will see differences there. And those, when there is something that is different, you will see it here, okay? When you do this change. When you do this the adjustment here, that's when it becomes relevant, right? Because what this is doing is having in consideration the previous contract, okay? The previous contract to create a chart. While when I don't have this one, you will see a tremendous when this contract ends. In next, not this Friday, but the next one, there will be a gap. There will be a gap in this chart, like a huge gap, actually, 60 points gap there. But you will see that's not a gap. The market didn't gap, or actually, the market didn't gap. That's a change of contracts only. And to do that adjustment is what you use this. It's just, maybe it's just too much for you right now, but don't pay too much attention to that. Don't get too focused on that. Those things are part of the business, right? Sometimes it's relevant, sometimes it's not. It was very relevant 2 contracts ago. Not in March, not in December, but September. We have something like that. At that time, the market was, I think, was really close to 200. But to see that, you have to do this adjustment in your charts, and otherwise you won't see it. Let's check here what happened. I guess what is September right here, right around the 200. There was a lot of activity around the 200. Futures, adjust for contracts. The unadjusted contract was buying here, right? And this area was far from from the 200. And those are little things, right? That people don't pay attention to, but can be relevant. Right now, for example, if I use this contract. This is remember, this is March, okay? What do I have here? I had a 5,200. And what happened when the markets are around these numbers? All right, that's a lot of back and forth. It's a lot of back and forth around those numbers. Back and forth, back and forth. You just have to remember what happened around the 5100 here. There's a lot of buying here. My bad. A lot of selling here. A lot of buying here. Just around this number. Okay? You cannot see it when I close the profile. But there's a lot of things that happen here. What this number has, it has nothing. There's nothing in there. But traders just give those entry numbers some value. Right? Now, March or June doesn't have too much volume now. So right now, I don't think this is going to be too important. But if we were, instead of being March 4, today was March 11, this will be important. Okay, this will be important next week. If this market was trading around here, you probably could have seen some kind of crazy movement. What's happening here? There's nothing here. But when you check this one, you will see. Okay. So what happens when the market is around these numbers? There's high risk there, right? Because there are traders that think that this is going to be the base of something big. There are traders that are going to think that, okay, this is it. It's time to sell. So there's a lot of back and forth here. Once these levels are clear, it has less risk to short this market, for example, maybe 10 points below here, or 10 points above this level here. 10, 20, I don't know. I'm just saying. I'm just talking about the number. I'm not saying you go long next time the market is 10 points high. Right? I'm not saying that at all. But we need to be watching the market. What happened here, for example, right? You have the 5100. There was a check here, just 11 points above the 5100. And the most important thing that happened here was checking this all-time high, make a new high, make another new high, removing the longs, the motions. Remember how many distributions this market has. In just 3 periods, it has 3 distributions here. Now it closed one, got this one, and this could have been low risk. Because why I say low risk here? Because you don't have too much. The market doesn't have to do too much for you to know, for us to know that I'm wrong. If the market keeps going lower, 1 tick, 2 ticks, 3 ticks, 4 ticks, 1 point, 2 points. That 2 points is a lot already here. Alright? It doesn't have to go too much, too far. But what about if I buy here, for example? How do I know here that I am wrong? How do I know? Maybe the market can come to this high, previous high, but that's 3 points that I have here. That's a lot, right? Here is also this and how do I know I'm wrong is this market closed at distribution. That's why I told you that day that this was a key level. I go inside I choose this level here because of this distribution happened. Because of this distribution that happened during this day, the 23rd here. It is the same one. It is the same one. Mechanical low, testing here. And this is why Jim says this is a weak rally, a weak market. And traders don't understand that. Most traders cannot grasp the concept of weakness when a market has a huge rally, when prices have went too far, too fast, too fast. Too much, too far, too fast. Okay? What's happening in this market now, for example? It has a stop. It's way up here. This distribution in the ES has been closed. So we only have 2 distributions now, not 3 anymore. This level here, we have an option that was going to the upside on Friday, late Friday. This is over. We have a new one. But we don't know what this is going to be. Right? Notice the volume as well. How much volume the overnight has? That has really low volume, 172. Compare this volume to what happened on Friday. Friday we have 400, almost 500,000. That's good volume, you know. Something around 400, 500K during the overnight, that's good volume. There's significant things can happen during if we have that kind of volume. Come on. And this is June contract, right? This is not relevant here. I wouldn't do anything in this market, not yet. But this is something I'm going to be watching. We're going to start watching often now, right? Until with time in 2 weeks, next week probably this contract is M4 is going to replace H4. How much volume we have? Okay, volume is increasing. Okay, we have higher volume than Friday, than Thursday, than Wednesday. Now, also, you know, we may not have the same activity, the same emotions that we have on Friday, but volume is going to be a little bit higher than Friday. So we have higher volume, maybe 3% higher, something like that. All right. Where the market is? We have a market that's rallying. High is right, the POC. So, good odds that that level is going to be taken. Good odds that level is going to be taken. I will consider this high as weak. Now, how much volume the overnight has? Right? How much volume the overnight has? That also plays a role here in this high. Right? There's no significant excess here. Weak high. Now traders are selling from previous period high, buying from Halbach. Systematic, not systematic, but mechanical short-term trading going on here. 1, 2, 3 distributions have been closing Nasdaq, right? 3 distributions have been closing. Now check where this low is at. Try the low of these distributions, right? How many distributions remain? 3. 1, 2, 3. I am not attracted at all. I have plans. If I have any plans here, my plans do nothing. Just watch here. Don't know, man. Too many things have happened the last week, the past week. These are very, for me, they are very treacherous markets here. Now this is not a reference anymore. This is now check this out. Right, where this market is buying here, right when the market has huge volume. This is just one piece of information here. Still, there's significant volume that is coming. You know, you have thousands, close to the 10,000s here. Here, for example, right? You can see this. Here, I will go ahead and mark this areas here. This is high. It's not low. This is significant. 10,000, 10,000, 10,000, 10,000, 10,000 here. Huh? Then it helps, I guess, who is Yeah. If you are there, for example, you were asking about volume, right? How I use volume. Um, let's check. This is Nasdaq, for example. This is significant volume I have here in Nasdaq too. Oh, this is this, and all the way here is 3,000 in the first period. That's huge, brother. That's huge volume here. Notice where Friday has the bulk of the volume, right? I'm going to highlight just the reds here, right? How many periods the market needed to print, 5,000 contracts. 1, 2, 3, 4, 5, 6, right? Or five here. In just one period, we have more than half, at least half of this. Just one period here. That tells you something also. There's nothing here to the upside. At least so far, this high is quite questionable. It was selling from zero. But the volume here is not challenging. The market is not challenging this area. Not yet. So we have the 18,300 there. Notice what is happening here. The market is trying to go lower. It just stalled here, right? It just stalled here. It's trying to go lower. But what happens is dries here, and where is being bought? There is no sellers here, but where buyers come from? Exactly the halva. So both sides here, both the buying and the selling is very mechanical here. Traders, the last thing that traders remember here is every single break, was bought on Friday, and this is very systematic. You remember what happened Friday? Once we have this, as soon as the market took, I would say the previous period high, all right, or what at the time was held back of each period a little bit. It has a little bit of extension and then was bought. A little bit of extension, then was bought. A little bit of extension, then was bought. And every single period, from this period. The same kind of action happened here as well, and L. I don't remember M. And that's what Jim says. I think that's, you need to come to you need to have your own conclusions as well, your own observation. You may be wrong. Don't be afraid to be wrong. That's the way how we learn. We can be wrong, but we correct. You make corrections, we make adjustments, and that's how we keep improving, or we start improving. It takes time. Don't expect to have, to have big wins right from, when you are starting. The worst thing that can happen to trader is to be successful or to have big profits, when they start. It can happen, right? It can happen, but we don't know. You don't know what is happening. You will think when that happens, you will think the first thing you will think is this is so easy, brother. I'm going to be millionaire here. I just need you start to make calculations, right? I made 10,000 this year. I made 10,000 in 1 month and 1 week. Boy, I just need 2 months to make a million. If I doubled my capital in 1 month, gosh, with this at this pace, gosh, I'm going to have 10 millions in 3 months, right? If it was that easy, if it just was that easy, man. Trading is the hardest business, one of the most competitive business there are. We are competing against each other here. We are competing against the best traders in the world here. We are competing against companies that have lots of investment, to retrieve information, to get information ahead of everybody else, right? That invest huge amounts, huge sums to have information. We cannot complete that. We are such a, they have such a disproportionate advantage in that field, in that area, that worrying about that is really is a waste of time. We just don't focus on that. But you will see that if you, especially if we are looking for answers, we start to hop from one Twitter feed to another Twitter feed to look for explanation to what happened here, what's going to happen, what happened 2 years ago, what happened 100 years ago. We would just be so confused, and because everybody will have their own opinion, and that can be right. When you start to form your own opinion, that's when things start to change. Remember, you might be wrong, you might be right, but it's yours. It is yours. This business, the answer, it's very counterintuitive here. There's a lot of information that the market is generating, but also I can say that all the answers to our struggles are just within us, are just within ourselves. I was checking Brett Steenbarger. He has something. Brett Steenbarger. Okay. Why this? Really this? Okay, this one. Trading psychology is the struggles, the kind of he's a psychologist, but the trading psychology that a experienced trader needs is quite different than a beginner needs. It's quite different. Now, I can testify this one. When I started, I went and read some of his. This is his blogs, right? It doesn't help, right? It doesn't help when you are beginning. You need each stage. Each stage needs its own. How can I say this? Treatment. Because each stage of trading, each stage of the learning process has its own struggles and has its own answers, relative, or from the psychology part, right? I suggest you to, if you have time, check this blog. It's really good. Also, he has some good videos, but it all depends what stage you are. Okay, it is. After a while, after you are trading a while, some of his posts, some of his videos will make sense. The first time you might see, maybe doesn't mean anything, but you need to go through certain things to really understand. This law has been corrected. This remains questionable. Now check the volume. Yeah. Now, for example, you were asking about volume, right? Check the volume the overnight. This is how many hours? 12, like 15, 16 hours? How much volume do you have? 170,000, right? How much volume do you have now, regular trading hours? The same volume that the whole overnight in just 2 periods. And 1 period and a half actually, because not even half of the second period. We don't have even half of the second period here. The overnight is a completely different animal here. This high is questionable, this high is questionable, this excess is very questionable. This might be market might have gotten too long here. Have all-time high in the overnight in Nasdaq. Let's check the other markets. Oh, the bonds on Friday have a vicious short covering rally. That was a killer. Gold is rallying. Gold's making new highs. That's something to be aware of. Gold. Be careful with that. What about stocks? Ooh, Apple has a big break here. Damn. Ooh, check this out. Look at this, man. Look at what's happening to Apple. We were talking about Apple in the morning, right? It's back in this range. The potential is to the opposite side of this range. It doesn't have to happen today. This area was taken. Notice where Google is being bought from the 200 here. This is a weak low here. Amazon and Microsoft are, I won't touch these ones. Right? What's happening with Nvidia? Oh, gosh! After Apple got fine, because this makes a lot of sense moving from here to here, right? Gosh, look at this one. God, very much. Tesla. This can be a sequential trade. It's trending higher. This multiple lows here, multiple highs here. Meta. God, look at this gap here. Look at this gap. Very, very, very questionable markets here. And the time. What worries me is the time. What all these things are happening between between these two contracts, right? When the rollover is just starting. I don't want to touch these markets, man. I don't. Doesn't mean I'm not going to do anything, but another thing that I constantly trying to remember myself of is, to be neutral at all times. And I can see weakness in the market, or I can see a market strength in the market, but my mindset is neutral. Or at least that's my goal, right? To remain neutral. It's really hard to do it. I fail miserable so many times. I forgot how many times I failed to remain neutral, and I paid. It cost me dearly. Right. But that's my main objective all the time, to remain neutral. What is this 4130 here? What the heck is this? Oh, I will consider this level weak, okay? This level, it must bought exactly from this. This might be coincidence, but I don't think so. Alright, this also is the previous all-time high. Oh, I will consider this weak as well. Grays are weakness for me. This is all-time high, previous all-time high. Previous all-time high. And this is the first pullback low the market has. This is from this one. No, there is not a specific level here today. right? There's a lot of things that I have that can be used for today's trade. But after a rally like the one we have over on Friday, a lot of sideways trading can be expected. Right? And that is what happened here is rebalancing of short or long inventory here. Man, look at the volume. Look at the volume here. Just check this out. Thousands, 3,000, thousand. There's a lot of volume coming. That's coming in this market. Coming to Nasdaq. And all around the 30, the 18,300. Boy, man. But this market has no confidence, you know. It doesn't make up. Doesn't make up its mind yet. I would say maybe Nasdaq. What I don't like from Nasdaq is this high here, right? The overnight high. Oh, it has a new time high. Nasdaq made an all-time high. Pills, it has another visitor, very prominent overnight PSC, and has made an all-time high in the overnight. You know, this is overnight session. Markets have a tendency to check these levels before any significant break. It doesn't mean that the markets cannot break from here. It doesn't mean the market cannot leave this one. Okay, I'm not saying that all time the market comes back and check this one. When is that going to happen? That I don't know. There's a lot of volume that's coming here. Any questions, comments? Please let me know. I will appreciate any comment you have. It is 10:20. 10:22. Now check the ES here. A huge volume here, 10,000 here. You know, there is now also 10,000 here, but it needed 2 periods, right? 10,000 here, 10,000 here, very close to 10,000. Kind of like feeling this ball here. What this is doing is if you have something like this here, what this is doing is filling this thing and giving us a new shape, right? Really nice distribution here. Value is right at center here. You know, when markets are quiet, very quiet also, it's, I don't leave the trading desk. I don't leave the screen when I'm having this kind of very quiet opening. you can understand the break uh, Nasdaq has had, right? We had like 6 distributions here, very emotional day here on Friday. Now we have 2 distributions. Oh, as a matter of fact, the distributions have been close in the years, have they? This one. No, they have been close. Huh, huh, huh. Still inside previous day range. All this selling, inside previous day range. Week high. What do you do? What do I do here? There's nothing clear here. There's nothing. Huh? This low is weak. Selling coming from saddle. Overnight inventory. Okay. Let's see something. The overnight inventory was Nasdaq has overnight inventory. Kind of balanced to long. This can be some rebalancing of this long inventory. Notice what saddle is, and most of the trade happened above saddle, but there is also something below, right? So this is not 100% long. The ES is 100% short, and there's some counter-action to that short, during the opening. Now we have an inside bar here. Volume also seems like we're going to have same kind of volume, a little bit higher than Friday, which is not bad, right? It's a lot of things there. As I say, I don't have plans. Sometimes, you got this feeling, right? This is the thing we also. I guess somebody asked that too, about the feelings. Oh, it was you, that you say, I remember, I think, let me see if I remember well. I think you said here, right? I think you said here. You say something like, okay, it's time to short this market. It's time to short this baby. That's why you say that. The market came to this high here. And just after you say that, the market break. But you have a feeling there. Now, check your feelings. How many times you have said that, and how many times you did something about that, and how many times you were successful doing that. That's part of that's the intuition that we have. The intuition is something we can hone. I learned that from Jim as well. All credits to Jim here. But intuition can be honed. But if we don't do our homework, if we don't learn about markets, or if we have these habits that are just, we are just focused, we are trapped by price, that intuition is not going to have the right base, for example, right? With time, when you start knowing, when you start learning about dynamics, the market dynamics, when you start learning about markets, if you start learning about inventories, if you start learning about trending days, rotational days, hybrid days, news-related breaks, rallies, knee-jerk reactions, rebalancing of portfolios, hedging, all the stuff you start learning, your intuition will get better, right? There comes a time when you start to have the same feelings, right? But because you were hurt so many times before, now you have You doubt about what you feel, about what you are seeing, what you're watching in real time. And it takes time to become confident, and follow your intuition, because now you have a base, you have an understanding, you have a better understanding of markets. You also know yourself more, which is also really important. Remember that part of psychology. The first part in the psychology of trading is you got to know yourself. You got to know. So you have to solve your issues. You will see that we are full of traumas, issues that we may have that will affect our trading. You have to face those ones, acknowledge, and do something. Sometimes acknowledging is enough. Sometimes we need to do other things. But when you gain some experience, you start to, you get to know yourself, you identify your weakness and your strength. And with time you realize, rather than strengthen our weakness, we try to get, to be aware when our weakness can affect our trading, and reinforce, our build a strategy, our strategy around our strengths, to fully use the potential of our strengths. And that's when these three things combine, which are market understanding, self-understanding, and strategy. That's only at that time is when we become beginners. It's a long process, right? It can be discouraging, knowing that, we need to go through all of those things just to be a beginner. Because right now, but if we become, in any other business, any other career, you don't expect to be successful from the beginning. If you are an accountant, if you are a mechanic, if you are an economist, or any kind of business or career or profession we have, just because we went through college, or just because we have learned some skill, it doesn't mean we are going to be successful from the beginning. As soon as we start to work for some, as soon as we leave college, we don't, there are going to be people that are going to have a job that's going to pay $200,000 a year, but most people will start entry levels, right? And then we gain experience and build its way up, builds their way up. Same thing happens in trading, but the expectation in trading is different. Everybody expects, everybody expects, I'm going to be a trader, I am doing really well in my business, and I'm going to be doing really well also in trading from the beginning. And that's, unfortunately, that is a setup for failure. Because we don't know the process. Alright, let's go back to the markets. Now this high has been repaired. One tick here. Now this, I would consider this high repair. You have good high here. Overnight inventory is being rebalanced. Now selling is coming from this mechanical level here. This period come all the way down to this before it opened here. I'm going to just, unless I see something, I haven't seen anything so far. Alright, unless you have any questions, I guess I'm going to call it a day. And wish you guys a really good rest of the day. Stay safe. See you Hope I can see you tomorrow. Bye bye.